Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. A trade war between the world's two largest economies. The US imposes a 10% tariff on Chinese imports. Beijing responds with levies on coal, oil, LNG and more. Donald Trump orders a one-month pause on tariffs for Canada and Mexico as both nations pledge tougher measures on migration and drug trafficking. Plus, UBS reports net income well ahead of estimates. Switzerland's biggest bank promising share buybacks worth up to $3 billion. We're going to bring you the latest earnings from BNP Paribas, Dassault and Infineon. Happy Tuesday. Markets whipsawed by the tariff action. Then we are now in a trade war between the US and China. Were we ever out of one? Certainly, tariffs increased now in terms of the imports of Chinese goods into the US market, and China responding swiftly with a detailed response. European futures then currently pointing lower by 0.1% after the losses of a little over 0.8 yesterday. Mexico and Canada spared, at least for now. FTSE 100 futures pointing to losses of 0.2%. S&P futures stateside after the losses yesterday for both the S&P and Nasdaq 100, though they paired those losses towards the end of the session, currently pointing lower by another 0.2%. Nasdaq 100 futures looking to drop about 37 points. We look ahead as well to the earnings story from Alphabet with a focus on the data centers and, of course, advertising and search. Let's flip the board and have a look cross-asset. A little bit of stability across the Treasury curve so far. The Fed's Austin Goolsbee speaking yesterday saying it makes sense for the Fed to be on pause given the uncertainty around Trump's policies. We get further speak from Fed speakers and officials through the day, including from Bostic and Daly as well, so watch for that. 426 right now at the front end on the 2-year. That's where you saw the action in terms of the selling pressure yesterday. Again, that has paired a little bit more stability across US Treasuries so far in the session. 102 on euro dollar. The euro's under pressure, down 0.5%. Brent at $75 a barrel. Oil falling 1.2%. So a change of direction in terms of oil prices after the strength that we saw yesterday, and largely down to the removal of the tariff threat around Canada and those oil exports, at least for now. Gold at $2,815 per troy ounce, just up slightly so far in the session. Let's get the Asia market reaction then to what we know has unfolded between Beijing and Washington. Avril Hong standing by in Singapore. Avril.
Yeah, Tom, the US-China trade war, as you say, has begun. That deadline from the US came, went, no signs of any conciliatory tone between the US-Chinese presidents or reprieve on the tariff front. And I'm sure you'll get into some of the details on China's retaliatory action with Min in just a bit. But I thought I'd highlight the point that MLive's Mark Cranfield has been making on the blog, in that Chinese authorities' response has been quite telling, in that maybe they themselves don't see Trump backing down when it comes to tariffs. Amid all this, we see how major indices in the region, including the Nikkei, very quickly paired gains from earlier on in the session. Dollar China, you're talking about the offshore renminbi here, hitting session highs, but really remarkable how the Hang Seng managed to retain most of its earlier gains, as did the Hang Seng Tech. A couple of positives that Chinese stocks have going for it. The idea that maybe coming back from the long holiday, Chinese authorities, now that they have a clearer picture on what they're dealing with as far as tariffs are concerned, might be more confident in bringing out the big guns for stimulus. Then most of the economists that we've spoken to have also said 10% hit from tariffs. That's something that China's going to be able to absorb more or less. And then for tech in particular, they also have the DeepSeek narrative going for them. So even though we're seeing a bit of sentiment hit, it's really interesting how Hong Kong shares have managed to retain their gains, and we'll be really, really closely watching how onshore markets reopen tomorrow. Tom.
OK, Avril Hong in Singapore. Thank you very much indeed. Yes, mainland markets reopening, of course, tomorrow after the Lunar New Year. Does it change the calculus, as Avril was suggesting, around the fiscal response from Beijing? So President Trump's 10% tariffs on Chinese goods are now in effect. We've just learnt as well that China is imposing retaliatory tariffs against the US, also announcing it's investigating Google over alleged antitrust breaches. Let's get the details then with Bloomberg's China correspondent Min Lo, who's been passing all of this for us. Min, what has been announced so far from Beijing then?
Well, as you said, that antitrust investigation into Google, as well as a series of tariffs, 10 to 15% on American agricultural machines, as well as oil, coal, LNG. A couple of American companies added to this unreliable entity list, and also export control on tungsten-related materials, materials used for solar panels, semiconductors. Very precise, very targeted measures, although not extensive, but it shows that China is not going to back down without a fight. Now, some analysts had expected that maybe China will not retaliate so quickly, and clearly this is a very highly choreographed move, given that China had waited exactly until after the tariff kicked in at 1:01 p.m. local Beijing time before announcing these series of coordinated measures. And this comes as Trump had said he plans to speak with President Xi within 24 hours. That was several hours ago, and he said that if no deal is reached, that the tariffs could be, quote, very, very substantial. So 10% is just the starting point. It could go up or go down from there, depending on how negotiations go.
Yeah, China and Beijing clearly had a ready-to-bake response, didn't they? Quick, swift and targeted, as you say. Oven-ready response from Beijing. Where do we stand then on those talks between China and the US?
Well, there's really an infinite number of ways that negotiations could go. And one thing that China could do is maybe to return to that starting point of the first trade deal that was struck with President Trump in his first term in office, committing to buy maybe a certain number of a certain amount of American products in exchange for other things that they want, for instance, more market access into the US, or perhaps being able to buy what they want to buy, including advanced semiconductors, for example. President Trump had said that the reason for imposing these tariffs include fentanyl, China producing the ingredients for that. And this is perhaps an off-ramp that could be offered to China, because that is a low-hanging fruit. It's something that Beijing could very easily clamp down on if it so chooses to. This is also something that both countries have already began working on. So that's one possible thing. But again, you know, many of these measures, they're not that easy to undo. Once you're on an entity list, it's not that easy to get off it. So it remains to be seen how those negotiations will go. And, you know, it's a really a trade war that could escalate further, and we'll have to see what happens in the next few days.
Yeah, certainly Trump has threatened, hasn't he, additional tariffs on China, depending on how those talks unfold. China correspondent Min Low with a great breakdown of the Chinese response to those 10% tariffs, of course, from the Trump administration. Min, thank you. President Trump, meanwhile, agreeing to delay 25% tariffs on Canada and Mexico, at least for a month. That's after both countries agreed to take tougher border control measures. Mexican President Claudia Sheinbaum promised to send 10,000 National Guard officers to the border to stem the flow of migrants and fentanyl into the US.
In terms of trade, my proposal was the same one. Why don't Mexico's Secretary of Economy and the U.S. Secretary of Commerce work together so that we can also get results and learn about these issues? Then he agreed, and at the end asked me how much time I wanted to put on pause. I said, well, let's put it on pause forever. And he asked how long. I said, let's put it on pause for a month. And I am sure that in that month we will be able to have results. Good results for his people and good results for Mexico.
Let's get more then on how markets are reacting to this latest stage of a US-China trade war. Mark Cranfield from Bloomberg's MLive team joins us with the market reaction. Mark, what does this mean for the yuan? The offshore yuan right now under pressure, Chinese assets in focus. Does a fiscal response from Beijing offset pressure on Chinese assets? The market reaction to this move?
Yes, I think you have an interesting situation here where on the one hand, there's clearly, traders will believe there's no incentive for China to allow the yuan to get stronger. As long as it remains on a gradual weakening path, that will be where investors expect it to continue to go, given the amount of uncertainty, whether the United States will retaliate more or China will do more. The net result will be that the yuan can continue to stay on a weakening path. In the background, you have a different scenario for Chinese equities. Clearly, there's already some differentiation going on here where people are picking up on the fact that the progress China has made on AI, particularly related to DeepSeek, it looks as though it is going to benefit some Chinese companies, regardless of what the US does. And you can see the performance of companies like Alibaba. Their shares have been doing extremely well. They have results out later in the week, which people will be expecting will underline the fact that they're in a different league compared to some of their American competitors. So already there's some signs here, and you can see that the response of the equity markets, Hang Seng Tech Index is still up 4% on the day, even after tariff imposed by China just a couple of hours ago. So something is happening here. There's also some expectations that China will get the big bazooka out. They will stimulate their economy when they come back from the Lunar New Year break. So equities may be able to diverge from the US markets. At the same time, if they do keep the yuan relatively weak, that will help the sectors of the economy that are still able to export around the American measures as well. This could be a win-win for China assets in that point of view. However, there are, at any moment, investors will be expecting there could be a response from Donald Trump or from other parties, and things are very volatile and fluid. But certainly, the net result here clearly is that the dollar is very firm. Traders are not going to give up on their long dollar positions, and that would include against the yuan and other emerging market currencies.
Okay, Mark Canfield from Bloomberg MLive's team in terms of the pressure valve of the yuan, potentially further fiscal stimulus, and of course the catalytic effect of DeepSeek on some of those tech-listed names as well. Mark, thank you in terms of how Chinese assets are and could perform as a result of the trade war and the step-up that we're seeing. Now, the CEO of Hapag-Lloyd, one of the world's largest shipping companies, has told Bloomberg he expects US tariffs to have a limited effect, at least in the short term. Rolf Haben Janssen also said trade always finds a way to overcome disruptions. He's been speaking to Bloomberg's Oliver Crook.
I think in the end the effects on global trade will probably be somewhat limited. I think especially the 10% on China will not do all that much, also because we've seen a recent appreciation of the US dollar anyway, compared to many currencies. So short term, I don't expect to see a lot of effects from that, but longer term, of course, tariffs are never good for global trade.
Oliver Crook joins us now from Hamburg. He's been speaking to those executives, of course, with an eye on trade. Ollie, how is the threat then of US tariffs playing out in the region? We've been reminded that if he gave concessions to Canada and Mexico, he is prepared, Trump, to pull the trigger on tariffs, and Europe could be next.
Yeah, I think that's really interesting, Tom. I mean, I think it really sort of gives you the playbook, and I think the Europeans are going to be obviously watching this very closely. I mean, we remember that obviously this is a crucial issue for the Europeans, but even more so for Germany, right? This has been the great wealth creator for the German economy over the last few decades. Globalization, really the sort of being able to have the free flow of trade. It's really what the Germans for many, many decades based their entire economy on. I mean, Germany was the biggest exporter in the world until 2010 when China took that mantle and really began to sort of use that model. What I think is interesting, Tom, is we speak to the CEO of Hapag-Lloyd there, who says that really trade will find any sort of route. But for the German economy, they may be so that goods will continue to ship, but the question is, where are they going to go? And I think for the Europeans, yes, they're ready, they're locked and loaded with the sort of retaliatory measures. I think they'd like to strike a deal, of course, and we know around some of the contours that Trump would like to see a move on that, NATO spending, buying of LNG and that sort of thing. And what's interesting now is that you have these sort of tariffs that are going to remain with China. That's going to have consequences also for Europe. There is the good side of it, right? If you have higher tariffs on LNG coming from the United States going into China, potentially some of those cargoes will be able to come over to Europe, and that is something that Europe really needs. Where it's bad news, Tom, is that for the sort of Chinese economy, a lot of that capacity that was going to the United States from China can't really be absorbed around the world like anywhere, like in Europe. And that is one of the biggest threats to European competitiveness, is being basically undercut from products coming from other places. And that is why, obviously, the EU also had to raise EV tariffs, because the United States did the same thing. So this is going to be a very interesting way in which it sort of trickles through to the European economy over the next couple of months.
Well, how's it expected to trickle through to the politics of Germany as well? Because, of course, polls are in a few weeks. What is the latest on the campaign trail there?
Yeah, so listen, as we saw on Friday when sort of Friedrich Merz, the head of the CDU, the party that's leading the polls right now, really tried to make immigration the main issue and voted with the AfD, meaning that that's the first time that the sort of centrist party voted with a far-right party since the end of the Second World War. That created a huge amount of upheaval within Germany, a lot of protests, particularly here in Hamburg, which is a sort of SPD holding point. This was, Scholz was the former mayor of Hamburg, and this was really one of the great concerns going into the weekend. And then after all of that, Tom, the vote failed, because many of the CDU didn't actually back it. So it's demonstrated in some sense that Merz didn't really have control of his party and caused a lot of questions. But we heard from him speaking yesterday, saying basically reassuring that he would not work with the AfD. Have a listen to what he had to say.
Wählerinnen und Wählern in Deutschland,
I can assure voters in Germany very clearly of one thing. We will not work with the party that calls itself Alternative for Germany, not before the election, not after, never.
nachher nicht, niemals.
This party stands against everything our party and our country built up in Germany over the past years and decades. It stands against our Western orientation. It stands against the Euro. It stands against NATO.
Gegen die NATO.
And Tom, what I think is interesting is despite what I think can only be described as a really sort of very poorly handled political maneuver by Friedrich Merz, when you look at the polls, it hasn't really changed things all that much. You know, he's still holding at about 30%, AfD still around 20%, maybe gaining a point or two. I think what's interesting now is you're hearing Friedrich Merz trying to move the focus more on the economy, trying to turn the economy around. I'll just end by saying, Tom, though anecdotally, you talk to people in Germany. I talk to many of my friends and other people that I know, and I ask them who they're voting for. They say they have no idea. And that is, you know, people that have been voting for a long time, who have been really or very familiar with the political landscape in Germany. And so, I mean, I don't know what that tells you in terms of the polling, but there are a lot of people that really don't know what to do this election.
OK, Bloomberg's Oliver Crook on the ground for us in Hamburg with a finger on the pulse of trade and the reaction to tariffs at a time, of course, of political uncertainty in Germany. Our special coverage ahead of the German election continues. It's from Germany to Switzerland right now, and the earnings story coming through from UBS, the Swiss lender, coming through with a big beat around 30 minutes ago. Fourth quarter net income coming in well above the estimates, $770 million. The estimates had been for $485 million. The UBS equities trading team putting in a very good performance, rising in terms of UBS equities trading by 44%, outperforming their US peers as well. They are targeting about $100 billion of net new assets for global wealth management. They did miss on that front, but top line for the fourth quarter, a very solid beat coming through for UBS in terms of net income. They do plan a buyback as well, up to $3 billion in terms of the buyback for UBS. Coming up in the next hour, we're going to hear from the UBS CEO, Sergio Motti, on today's earnings from the Swiss lender. We're also going to be speaking to the CEO of Dassault Systèmes, reporting fourth quarter earnings. I'm going to be speaking exclusively to the CEO, get his response to the earnings story and how that positions the company going forward. Stay with us. This is Bloomberg. Welcome back. Happy Tuesday to the earnings story right now with a focus on the software conglomerate that is Dassault Systèmes, based, of course, in France, reporting fourth quarter earnings. Top lines coming through in terms of fourth quarter revenues, coming in slightly below the estimates, just slightly below the estimates, 1.75 billion euros. The estimates have been for 1.76 billion in the fourth quarter. In terms of the outlook for 2025, they see revenues coming in ex-FX impacts up between 6% to 8%. And on margins for 2025, they see operating margins of between 32.6% to 32.9%. So some top lines coming through from Dassault Systèmes. And we will be speaking now to the CEO of that company. Very pleased to say that Pascal Daloz joins us live from Paris. Pascal, let's start with your assessment of how these earnings position the company then for growth in 2025.
Hi, Tom. So I think we are pleased with the Q4 results. Not only because we see an acceleration of the top lines, and you can see it with the 9% growth for the software revenue, but also because we had a lot of success with, from a commercial standpoint. And this morning, maybe you have seen it, we just announced a significant partnership with Volkswagen Group. It's not only Volkswagen, it's all the brands, Porsche, Volkswagen, Audi, Bentley, Lamborghini, I will not name all of them. And they have decided to embrace our platform at large, not only for the design, but also for the manufacturing as well. So why I'm saying this, it's because this will nurture, obviously, the growth for the future.
Yeah. Well, it's interesting you talk about that partnership with Volkswagen, because we have seen some delays within the auto sector. It's clearly an important unit for you and the team. Do you see those delays being extended? What are you seeing from your customers more broadly when it comes to autos, given the pressure that they're under right now?
They are under pressure, but at the same time, they need to transform themselves. So I think for us, it's a driving force for the adoption of our platform. And if you remember the sequence of events this year, we started by BMW, then we announced Volvo, we had JLR, we had also, Renault. Now, clearly, Volkswagen is the next one. So there is a domino effect for us. And the reason is because beyond the electrifications, there is also the cost effectiveness, which is at stake. And our solutions are really helping them to continue to innovate at the same time, but also to be much more effective. One of the key take is, this industry needs to reduce significantly the cycle time, probably by half. And this is where our solutions are extremely instrumental for them.
The Industrial Innovation Unit brings in, what, about 49%, 50% of your sales overall. Are you seeing cautiousness generally amongst manufacturers in terms of their ability, their willingness to spend?
There is some, but at the end, the question is always the same. Are you critical or not for them? So I think we suffer a little bit from this in the middle of last year when, we start to see some slowdown in the investments. Now, I think most of our customers, they make their mind and they have put the priority in terms of investments. And clearly what we do is on the top of the list. So I have some confidence for 2025 about spending, even if, as you say, they are probably much more careful in the way they are investing.
Is Boeing holding back on orders right now?
No. We signed with Boeing this long-term partnership a few years ago with a yearly ramp-up. So we continue to deploy our solution within Boeing, and we are helping them to accelerate the transformations.
Talk to us about your reaction to the planned increase in corporation taxes from the French government. What kind of impact could that have on your business?
It's around 25 million for 2025. But I think the most important for us is the fact that we continue to put some tax benefits for the company investing in research and development, because this is really the core of what we do. So the tax credit related to the R&D spending or the specific program for what we call the IP box, when you license your software or your IP to other entities. I think this is extremely important for us to keep it, because the competitiveness of Europe and France particularly is at stake if we are touching this.
OK, Pascal, thank you very much indeed. Pascal Daloz, CEO of Dassault Systèmes, on the back of those earnings and how those numbers position the company going forward with a partnership deepening with VW and the automaker space. We appreciate your time. There's plenty more coming up. Stay with us. This is Bloomberg. Good Tuesday morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. A trade war between the world's two biggest economies. The US imposes a 10% tariff on Chinese imports. Beijing responds with levies on coal, oil, LNG and more. Donald Trump orders a one-month pause on tariffs for Canada and Mexico as both nations pledge tougher measures on migration and drug trafficking. Plus, UBS reports net income well ahead of estimates. Switzerland's biggest bank promising share buybacks worth up to $3 billion. We're going to bring you the latest earnings as well from BNP Paribas and Infineon. Let's check in on the markets then. Whipsawed, of course, by the tariff details. A reprieve, at least for now, for Canada and Mexico. The main story right now is tariffs have been imposed then on China, and China has come through with its own playbook, retaliating swiftly with a direct set of measures hitting a number of different imports into the Chinese market from the US. European futures, after dropping around 0.8 yesterday, further losses set for today, down 0.1% across the European Stocks 50 futures. FTSE 100 futures pointing lower by 22 points, down 0.3%. Energy as a sector will be a drag as oil prices fall. S&P futures currently pointing to further losses after a drop of around 0.8% yesterday. Currently flagged lower by 0.3% as China responds. Nasdaq 100 futures also lower by 63 points, flagged down 0.3%. Alphabet earnings later. The focus there will be on the search business and the data centers, and to what extent the story of growth and expansion on both of those two lines continue for Alphabet. Of course, anything the executives say about DeepSeek and the innovations out of China will, of course, be in focus. Let's flip the board and have a look cross-asset. You've seen a bit of stabilisation across the Treasury markets. Yields are up around 1 basis point across the length of the curve. A lot of selling pressure yesterday, particularly at the front end on the tariff risk. Now that tariff story, of course, has moderated. 426 right now on the 2-year. Euro remains under pressure. The Bloomberg Dollar Index is largely unmoved right now, but the euro has dropped 0.5%. You continue, of course, to raise questions about whether or not we get to parity for euro dollar. 102 right now. Brent falling sharply. WTI even more so. China putting in place some tariff restrictions in terms of the import of oil into the Chinese market. US oil, currently Brent down a full 1%. Gold at 2,811, just down 0.1%, the yellow metal. We are also going to be checking in, of course, on Asian assets as well, in light of what we've been seeing in terms of the Beijing response to those 10% tariffs coming through across the board from the Trump administration. Relative resilience. The mainland markets come back tomorrow. They're closed today still for the Lunar New Year holiday, so we'll see what the response is from mainland markets tomorrow. There's a bit of a catalytic effect in terms of expectations that DeepSeek will prove a catalyst again for the innovation sector. Maybe Beijing comes through with more fiscal response as well, because right now the markets in Hong Kong are showing gains, and you can see that, of course, across the Hang Seng up 2.3%, and particularly the tech story remains robust in terms of that listing and exposure in Hong Kong, with the HS Tech Index up 4.5% so far in the session. The Chinese yuan is down about 1/10 at 731. That's the offshore pricing. Now, China has announced a probe into Google and new tariffs on US products as Donald Trump's 10% levies on Beijing took effect. Some of the other measures Beijing imposed include a 15% tariff on coal and LNG, as well as export controls on tungsten-related materials. US stock futures erased earlier gains. Chinese markets reopen tomorrow. As to tariffs on Mexico and Canada, Trump has delayed those for a month. Negotiations then between Canada, the US and Mexico will continue over that time frame. We're going to bring you some lines right now from the chip maker that is Infineon in terms of a lines crossing for the second quarter. This is the redhead, second quarter for Infineon. We're back to the earnings story right now. They come through with revenues in the second quarter of They expect to see revenues. This is the forecast. They expect to see revenues in the second quarter of about 3.6 billion euros. That is slightly above the estimates of 3.42 billion. So in terms of the outlook, a brighter picture than had been expected. The first quarter numbers coming in with also a beat in the first quarter for Infineon. Revenues at 3.42 billion. The estimates have been for 3.21 billion euros. We know there's a focus, of course, on the inventories for this chip maker. We have been speaking, Anna Edwards, to the CFO of that company. Let's take a listen to that conversation and reaction to the earnings.
We continue to expect this, we call it gradual or modest recovery, not a big upswing, but a modest recovery in the second half of 25. And why is that? To your question, there are strong growth buckets. One is AI. The other one is still the electrification of cars, for example, in China. And the third one is that the first 6 months are heavily impacted by the inventory correction of many of our customers, be it on the automotive or on the industrial side. And we expect that inventory correction to phase out in the next months. And that is the core assumption for our yearly forecast.
Okay, so that's the forecast and what they're based on. Can I also ask you about tariff impact? We're talking now, Sven, just moments after hearing that tariffs have gone on to China from the United States, and then China has retaliated with its own tariffs. You do business in China. We're also thinking about the possibility of tariffs from the US into Europe. How concerned are you about the tariff impact on your business?
Yeah, so to be very clear here, a major escalation of the tariffs is not included in our guidance. Because we still are not giving up in advocating for free trade. We do not see that as positive for the industry. So an escalation of tariffs and counter tariffs would be negative. But I also can explain to you that if you look at Infineon, if you think about us in terms of the sales footprint, but also in terms of the manufacturing footprint, we are globally diversified. And of course, we are used in a semiconductor industry to work with these situations, but the speed and the intensity, when I woke up, I learned that Canada and Mexico seem to be pushed out by at least a month. That has increased, and of course, we are watching that very closely in order to analyze the implications and then to draw the right conclusions.
You're diversified in lots of ways, Sven, but the business is still very reliant on the car sector, and that could be an industry that faces more tariffs. Are you making any base assumptions about tariffs at this point? You said that no major escalation in tariffs is included in your numbers, but have you made any adjustments on that front?
Yeah, so indeed, the automotive industry represents, give or take, half of our business, so that's very relevant. But here again, to my point, it is a global market, but it's also a regional footprint in terms of manufacturing and sales. So we have manufacturing in Europe, we have manufacturing in Asia, we have manufacturing in North America, and this will help us to mitigate certain effects. So smaller tariffs are included, but as I said, no major escalations. That would require further analysis.
Okay, so smaller tariffs are included, but not any major escalation. Can I ask you about European competitiveness, Sven? Because you talked there about the different geographies that you operate in, so you're very well placed to talk about Europe's competitiveness. You've benefited most recently from a drop in the euro. That perhaps helps a little bit. But what other suggestions, as Europe thinks about how to make itself more competitive, what other suggestions would you have?
Yeah, indeed, the currency, as you said, is a tailwind, but I would not count on the currency because that can always go into different directions. I would say that what we are expecting the most, and there is a broad consensus on that topic, is that we have more political regulatory stability. On the one hand, and we are welcoming very much the very recent announcements from the EU, we need to look at some overarching regulation which has been announced in the past and bring it down and scale it down to levels which are adequate, for example, also for investors.
Okay, Infineon's CFO, Sven Schneider, speaking to Bloomberg's Anna Edwards on the back of those earnings. Coming up, De Beers reaches a deal with the government of Botswana to extend diamond mining licenses. We're going to be speaking to the CEO, Al Cook. That is next. This is Bloomberg. Welcome back to the diamond trade right now, because the government of Botswana and De Beers have reached a deal on extending the diamond mining licenses for their joint venture, Botswana. The talks were reopened after the election of President Duma Boko in October. He had criticised the previous government's handling of the negotiations. The CEO of De Beers' parent company, Anglo has welcomed the deal.
I think the De Beers-Botswana partnership agreement stands as an excellent testimony to how these negotiations can work when both parties engage with a deep understanding of not only what is at stake, but the opportunities that these have to offer.
The Anglo-American CEO was speaking at the African Mining Indaba in Cape Town. Bloomberg's Jennifer Zabasaraja is there, joins us on the ground with another CEO within that business. Jen. OK, we're hoping to get the CEO of De Beers, who's alongside Jen Zabasaraja. We have some technical issues. We will resolve those, we hope, and then bring you that conversation. Because, of course, as we were saying, De Beers have signed that new agreement with Botswana. We know the history of De Beers and Botswana, and the economic prospects that have come through, of course, for that country go back decades. And so they have re-signed that agreement. And of course, that is essential, obviously, for the economic prosperity and the stability of Botswana, which of course stands out on a number of those metrics within the continent of Africa. So Jen Zambasaja, we have re-established the line. She's in Cape Town for us with the CEO of De Beers. Jen.
Yeah, Tom, good morning to you. I am here with Al Cook, the CEO of De Beers. Al, great to have you here, especially here at Mining Indaba. We were just listening to the Anglo-American CEO saying that this is a welcome news, right, this agreement. How would you characterize this for the broader diamond industry, this agreement between De Beers and Botswana?
I think this is a really important agreement. It's taken 6 years to negotiate, but it's going to take us out to 2054. So, like diamonds, it was worth the wait. The agreement's really important. This is the greatest public partnership in history, not just in diamonds, but globally. And the opportunity to work together between De Beers and Botswana out until the middle of the century, I think, is a terrific one for the industry.
Well, we don't know a lot of details about this agreement. We do know that there's a marketing cooperation agreement. Talk to us about what that actually entails.
It's really important. So instead of working in different ways, for the first time, the government of Botswana and De Beers, we're going to bring our marketing efforts together, we're going to bring our funding together, and we're going to market together. And there's a fantastic opportunity because, of course, we can tell the story of diamonds from Botswana. For the first time in human history, we can trace the diamonds that we produce, so we can tell someone at a store in America, this diamond came from Botswana, this diamond came from South Africa. And that means we can tell the story of Botswana in a new way that really tells all the good that natural diamonds do.
How is that different, though, than what was happening in the past? I mean, you talk about funding. What type of funding is actually going to go into this from both parties?
So in the past, we've done a lot of marketing of diamonds. De Beers became famous for that through the 20th century. But it was very much a diamond is forever. Now we can tell people about where their diamonds are from, the sustainability story, but above all, the people story of where their diamonds are from and the lives that they've touched. And the fact that it's taken 1 billion years to bring this diamond out of the ground, but it's also created good above the ground.
And funding. I mean, you said both parties coming to the table with funding. What does that look like?
So we'll each bring funding in proportion to the diamonds that we sell, and that will mature over time. But we will pool our funding together. We will work together to tell the Botswana story, to tell the natural diamond story.
Is there an initial a number that you've put on the table to actually get this off the ground?
Not for the marketing. So we'll be working together on that one. But there is a big number out there in terms of the number that we'll be putting into a new Diamonds for Development Fund, which will be supporting the sustainability and the development of the Botswana economy going forward. And that starts with a billion pula, which is round about $75 million. And that's the fund that is going to be creating the sustainable development that we can then talk about and build on in our marketing.
You talk about the story, Al, but the demand picture right now, if you look at the markets, not necessarily there. Is the story enough to change the demand in the markets?
So we saw some good signs in demand just before Christmas. In November, December, we saw demand for diamond jewelry in the United States up around about 8% year on year. So there are some encouraging signals. But you're absolutely right. Demand in the United States has been reduced by lab-grown diamonds. So we've got to take that on and tell the story of natural diamonds far better than we have. You know, lab-grown diamonds, they are their thing, but it's a little bit like taking a poster, buying a poster of the Mona Lisa and putting it up in an art gallery and telling people it's the real thing. It's not. A natural diamond is created over 1 billion years under the surface of the earth, whereas a lab-grown is created in a microwave in China in 3 weeks.
How much capital, though, is it going to take to actually offset the really, I mean, how much weight, really, lab-grown diamonds are carrying right now in the market?
I think it's about how we spend the capital. So certainly we have a marketing budget, and we now have a combined marketing budget with the government of Botswana. One of the things we're doing on marketing now is we're partnering with the leading retailers, the leading diamond and jewelry retailers in different countries around the world in an equal partnership on marketing. And that increases the scope, that increases the scale of the budget as well. So in the United States, we've partnered 50-50 with Signet Jewelers, and that's been terrifically successful. We've had a campaign called Worth the Wait, which has been going around the United States before Christmas. So we double up like that, but I think it's the quality of the story as much as the quantity of the spend.
And you've talked about costs. Anglo, though, has said they want to cut costs for De Beers. How are you doing both things simultaneously?
Well, I think we need to. So we need to make De Beers more efficient. It needs to be a more efficient organization. And we've taken $100 million out of our overheads, as we promised to do, for 2025. So that's really important. We've done that already. We'll declare that done. Now, that enables us to spend more money on the things that make a difference, which is what we do in places like Botswana and how we spend our money on marketing and how we create desire for natural diamonds going forward. So I think the two work together.
Al, you talk about the U.S. demand showing encouraging signs. What about China? That's a very important market for you.
So China's a really interesting case. I think across the luxury sector in China, demand has declined as Chinese economic growth has faltered somewhat. Yeah. Now, we see that as a rather longer-term issue. So the first thing we'll see is stabilization of Chinese demand, which is coming through at the moment. That's an important platform to build on. But quite honestly, we see the regrowth of Chinese demand being a rather longer-term story. The good news is that India has taken over where China was, and India is now the second largest market in the world for diamonds, and that's growing at double-digit rates.
And that's for the business as well? It's become more important than China?
It has. It has. The amount of diamonds purchased in India is now greater than in China.
Leave it there. That is Al Cook, the CEO of De Beers, joining us here at the Africa Mining Indaba Conference, just off the back of that agreement with De Beers and Botswana. Tom, I'll send it back to you.
Okay. Great conversation. The line about ready-made diamonds, fabricated diamonds in microwaves in China stood out to me versus the real thing dug up from the ground. China, Africa, Chief Africa Correspondent, of course, Jen Zabazaja, also with a question in terms of De Beers and diamond demand in the Chinese market. Now, some other stories making the news this Tuesday. The French government is facing a no-confidence vote after the Prime Minister bypassed the lower house of Parliament to force the adoption of his budget for this year. The far left has said it will file a no-confidence motion, and a vote is expected on Wednesday. But François Bayroul's government could survive if socialists MPs follow guidance not to support the motion. The UK Treasury has told government departments to prepare for their budgets to be frozen in cash terms ahead of a major spending review planned in June. The ruling Labour Party has previously pledged to avoid a return to austerity. But public finances are under pressure from high borrowing costs and stagnant economic growth. Unprotected areas like justice, culture and local government are most at risk of being squeezed. Plenty more coming up. Stay with us. This is Bloomberg. Welcome back. So Trump's 10% tariffs on China are now in place. China responds. They had the playbook. More symbolic than substantial could be the argument, though, given that, for example, a probe into Google is pretty insubstantial, given that business has very little exposure to the Chinese markets. Yes, they pull in a bit of coal, a bit of natural gas, a bit of LNG from the US market, but 10% is the tariff there, 15% on coal. They get most of their coal, in fact, China, from Australia. And then, of course, they produce a lot domestically as well. But the list is there. It's targeted and is clearly designed as a response as they gear up potentially for negotiations over that relationship. Let's flip the board and have a look in terms of the market reaction as well. Pretty benign. Mainland markets come back tomorrow. Hong Kong listed Chinese stocks, though, holding up. There's an expectation that maybe Beijing comes through from more fiscal support. And then there is still the expectation as well that tech companies can do quite well, given the innovations we've seen from DeepSeek. And you've seen that reflected on the HS Tech Index today, up 4.5%. Talking of tech, let's flip the board and quickly look at what to expect in terms of Alphabet. Their earnings coming out later today. The focus on data centers, the focus on search. There's been a split, an interesting divergence in terms of communications, where companies like Meta sit, where the gains continue, and tech as a grouping with Nvidia and Apple, both in negative territory year to date, dragging that one down. So look at that divergence, and will Alphabet build on that? UBS's CEO is coming up next. The opening trade is up. This is Bloomberg.